Hey guys, how's everybody doing? Happy Friday, TGIF, right? TGIF. All right, let's see. Sorry this is late. I was in the middle of something. Let's see what's going on. Well, that's a good look. Close the day on the highs. Ah, you've got to like that. Look at that. Look at that daily bar. Wow. Close the day and close the week on the highs. Let's pull up a weekly chart. Looks pretty good. We almost took back last week's bearish engulf. Everyone was upset about last week being a bearish engulf, which is a bad sign. We almost bullishly engulfed last week's bearish engulf. We didn't, however, so I guess the bullish engulf is still in effect, but this definitely makes it look a lot better. A lot better in my opinion anyway. All right, let's look at the weekly chart for the Qs. Now on the Qs, they did take back the engulf if you just count the body of the candle. The body of the candle went from the lows to the highs in the Q, and they didn't quite get the tail of the engulf from the week before, but they took back the body. I'm going to call that a win. Bitcoin weekly chart, a little bit weaker compared to the NASDAQ was strongest, SPY the second, and Bitcoin the third. Let's see what the 10-year looks like on a weekly bar. It's just grinding. Check out AMD's weekly bar. Yeah. What is that, a hammer or a doji? Or it has a tail like a hammer. It's kind of like a hammer, I guess. Now that's a doji. The doji, I think, is right in the middle, though. But that's AMDY, so that's not, who cares, right? That doesn't matter. It's AMD matters. AMDY matters, but AMD matters more. All right, Amazon, looking good. Weekly bar, ARC, looking good inside the previous week's range. Coinbase, it's been a disappointment. We're still one time framing down on the weekly time frame and have been for well, this is our second week, I guess. Anyway, all right. Well, the only reason I care about that is because it affects Coney. Let's look at old FEPI. Oh, look at that on a weekly bar, and it's a yield fund at an all-time high. Now that's impressive. That's impressive. Let's see if any other yield funds can do that. Let's see if all people always love triple QI. Let's see what triple QI looks. Same thing. Good job, triple QI. What else do people love? People love triple QI. Just joking. I do. But anyway, it looks good. It looks good. Now let's see what else we have. Let's look at all. Let's look at SPY. We usually don't look at weekly charts, especially weekly charts of yield funds. That one's also on a new high. Great job. Great job, SPY. GME grinding sideways on the weekly time frame. Google looking strong. All right, I'm done with the weekly time frames. Let's look at some other stuff. High yield technical analysis. Let's pull an end of week top 20. Still NVDW and NVDY, AMDY third, XYZY fourth, PLTW fifth. GPTY is a really good fund. I like that one a lot. Coming in at sixth. YETH at seventh. QDTY at eighth. COIW at ninth. OARC at 10th. Cornerstone CLM at 11th. MSFY at 12. Soxy at 13, AMZP from our friends over at Curve coming in there at number 14, Maxi for those Bitcoin maximalists out there. But a Bitcoin maximalist would just have Bitcoin. They aren't going to have Maxi. I mean, maybe that, they might have some Maxi also, but anyway. Then we have Eggs coming in at 16th. has a lot of balance there, getting about a 13% yield with about a 15% NAV return. That's really good. KQQ, EGGY looking good. There's all triple QI. There's all triple QI. It's yield that's saving it, but I mean its NAV return is not that great, but it's yield and it's low volatility. Low volatility is also, or the volatility is also figured into these. QDT looks really good, about half the yield, but more NAV return like we'd expect. Then we have XYLG. That's kind of an anomaly because it has a 24% yield, but it doesn't really have a 24% yield. They paid a special dividend back in December, or a one-time dividend or something. Anyway, all right, and then we have the rest of them. Let's see here, top 20 list. That was actually that was a different list, but whatever. It's basically the same. On the top 20 list, triple QI has dropped a little. Well, no, I guess it's the same. That's the same. All right, so let's get out of here and let's go over to the. Let's see how we finished out with LFGY and ULTY and those funds. Here's the LFGY verse. Well, look at that. LFGY is down 16 bips. Average stock is up a little bit, thanks in large part to Bitmine immersion being up 24%. Great job. Great job, Bitmine immersion. I mean, I guess. Good job, LFGY, for having it in the portfolio. Let's see if what Blocks did. Blocks had a little bit of it in the portfolio. This is the allocation. So Blocks had about a 1.6% allocation to Bitmine immersion. Well, let's see if it's helped them out as well. Here's the Bloxyverse, and yes, indeed it did. Blocks is up 1.2. Great job, Blocks. Average stock in Blocks is up 1.07. Let's go over here to, I guess we didn't check out Alti. All right. Well, Alti was what? Down 17 bips. Anyway, this one had Bitmine immersion too. So Bitmine immersion was in all three funds. So that really helped. All right, so now let's go to the index buffer report. Then I'll say hi to whoever's here. Looks like it's Marcus and 7 other folks. We'll look at that. That's a good debate. Let me just look at this index buffer report, see if anything stands out, sticks out like a sore thumb here. Let's see. Up the most. Is anyone outperforming the parent? Abney catching all that upside. XOMO catching all that upside. MSFO actually outperforming the parent. This is on a one-day basis, so this is kind of probably of limited use. I think the max factor is the new buffer report, and we saw the top 20 in the max factor. So sometimes it's interesting to see if one stock had a really bad day or a really good day. That's the yield max buffer reports. Now let's go to the index buffer. Now look at this. This freaking thing, this thing is a beast. 7% Q up. All right, well, I'm going to swerve over into the Q up lane. I know we did this the other day. I explained how it worked. Their money management style is aggressive, to say the least. Imagine putting 10% of all the money you had every day into an at the money call. Be good as long as the market does well, especially on the NASDAQ. So let's just go TQQQ, T triple Q in other words, and then we'll compare that against Q up. Well, since inception, it's been close. The Q up's ahead still. The thing was Q up. The thing that's actually amazing about this is somehow Q up was only down 20% in April, whereas this other fund, the triple leverage NASDAQ, was down, what is that, 35% or something? So I'm just eyeballing it, maybe more closer to 40% or something. If you divide 40 by 3, doesn't come out exactly like this. It comes to, what does that come to? 12, 13, something like that, 12, 13 or something. I think the NASDAQ itself is down a little bit more than 13, but still, it's about triple as bad as the NASDAQ did. I guess we could just throw in the old NASDAQ here, see what's up. So the NASDAQ itself looks like it was down about 15. So yeah, the TQQQ got 3 times 15, not quite that much, but close. We would expect that. Now Q up was down 20%, so it beat the NASDAQ, but it's leveraged. It's crazily leveraged. But the thing is, Q up is also beating the NASDAQ on the upside. Look at the piddly little NASDAQ here. Went from down 15, 20%, something like that, to up 20%. That's pretty good. A 35% face ripper is pretty good. But look at freaking Q up. Now that's a tactical, or it doesn't pay a yield, but that is an interesting fund to me. All right. So yeah, what do you guys want to talk about? So I feel bad this is late. Let's see here, but it is Friday. We can talk about whatever. Let me see this. There it is. There it is. All right. So it's just Marcus asking questions, but there's 8 other people besides Marcus. I really appreciate you guys, you other guys, whoever you are, being here. All right, Marcus, you're starting to think you don't need both. Yeah. I mean, let's just line them up. Let's just line them up. I have both of them. I started with YMAX, but then I dropped YMAX, not because I didn't like it, but because the market was crashing. I was trying to get rid of any high beta stuff I had right at the end of March when we were getting ready to lose the 200-day, and I thought it might get a lot worse than that. Of course, I am kind of a panican. I'll be the first to admit. So I cut YMAX, cut all my high beta stuff, and put it into more defensive stuff. But then as soon as the market turned around, I got out of the defensive, put it back into the high beta stuff. The thing was, though, I decided I didn't need YMAX and Alti. I wanted to put more in Alti. And also, I actually loaded up on LFGY right after Trump tacoed out of the tariffs back in, I guess, on April 9th or something. So I thought it'd be a good time for Bitcoin, and it has been. And that was a good time for Bitcoin. I mean, it's been a good time for risk assets in general. But anyway, all right. And of course, LFGY is not Bitcoin. It's DeFi. I'm a boomer. I get it confused, but you know what I mean, I hope. All right. So let's look here. Well, that goes all the way back to 2024. I mean, that's important to see, but let's go from the strategy change. Alti had a strategy change October 15th. I always remember because it's my birthday. October 15th of 2024. So let's go from the strategy change. And I mean, it's not like that other stuff didn't happen, but okay. So, you know, with dividends reinvested, it's dead even. But I don't, even though I do that, I do dividend reinvest, but I don't believe in looking at this. I think it's almost kind of like cheating. If you want to, that's fine. But I just want to know the fund's returns if I take them in cash, because I might pay a bill with it. I might buy, I might buy a growth stock with it. I might do all kinds of stuff. So I always look at this chart for comparison purposes. Other influencers will always quote this chart, and I can see a case both ways. Anyway. So down here on the without dividends reinvested, just taking the dividends, it factors the dividends in, but it doesn't give you it doesn't give you credit for the extra interest you get from the compounding, the effective compounding. Anyway, so it's still pretty good though. I mean, YMAX is ahead even since the strategy change, 16 to 13, percent total return, 16 to 13. It's been about 10 months. Let's look at the dividend. I mean, one paid 7 on 17 and one paid 6 on 10. I can tell you right now, 6 is a higher percentage of 10 than 7 is of 17. So Alti, probably has 20% on it in dividend, extra excess dividend, whatever you want to call it. But now let's look at both sides of the coin here. Let's check it out in a down market. We haven't had much of a down market during this time frame, but we can go from March 15th of 2025 to the April 8th or whatever. What's going on, Jackson? Anyway, I don't know. I think someone's here. So, all right. Well, I mean, that, in this comparison, the downside was almost exactly the same. I mean, this is a close call, Marcus. I don't know what to tell you. I just like Alti, but I mean, I like WiMAX too. I mean, because at any given time, I mean, when if you buy WiMAX, you don't have to worry about are you currently in Palantir or not, because you're in all, or Palti or in VDY or not, because you're in all of them. Yeah. Now, granted, you get Murney. But if you just look at the whole lineup of yield max funds since inception, there's about 2/3 of them are profitable on a total return basis, and that would make sense because that's the same odds you have selling options, and that's all they do was they sell options. So you win about 2 times out there. That's about the option seller's advantage, and that's what they're doing. So it doesn't surprise me, given a large enough sample. What they have, 40, 45 stocks in the WiMAX universe. So it doesn't surprise me that about 2/3 of them are up. I think it might even be more than that. I was just kind of eyeballing it, but that's what we'd expect. I wouldn't want to be in the index if only 1/3 of them were up, but your odds are pretty good in the index. Yeah, you get a dog, you get Murray, but you also have Hui and Palti and Nvidia and all the good ones too. But yeah, that's a tough call, Marcus. That's a tough call. I don't know. Okay, what are you really asking? If you have Alti, why have you? Yeah, that's one way to look at it. But I would say that the counter to that is because, well, I was going to say because Alti pays a higher dividend, but you already have Alti. I got it. So why would you get it in WiMAX? Yeah, I mean, good point. Good point. Good point. All right. Anything else you guys want to talk about? I mean, I'm welcome to do it, but it's Friday. It's late. There's 12 of you guys here. I really appreciate everyone that's here. I feel bad I don't have anything. Did you guys see my X Spaces? Hey, Jonathan, speaking of X Spaces, my man Jonathan was our host and for the X Spaces, did a great job, and I thought we had a good Spaces. Unfortunately, Brad was having some kind of technical problem. I didn't really have the goods on the swap. I'm kind of iffy on the W series funds, and it's not because I hate Round Hill. I don't hate Round Hill at all. Round Hill's awesome. I always say that XDT and QDT do a great job. I haven't said that from the beginning. But anyway, I missed that. I missed the boat on that. My bad. But for about the past year, I've had to admit they do a great job. They do a really, really good job. But I never was really impressed with XPay. And XPay just literally gives you back some of your own money. But it's just a fund that buys the SPY and pays a 20% dividend to you by selling shares of the SPY. So literally giving you back your own money. The thing about giving you back your own money is there's a tax advantage to that. For people that are trying to avoid the dividends that the SPY pays, which is just 1.2% or something, but still it adds up, especially if you have a lot of money. Wonder if you had a couple of million in the SPY and you're getting, $40,000 a year in dividends and having to pay taxes on it. Well, it might make more sense for you in that case to get some XPay or maybe not XPay, but to look at, trying to be sensitive about your taxes. So I get it, but I made a bad video about XPay saying XPay is going to decay, and I think the Round Hill fanboys don't like me. But anyway, be that as it may, I want to like the W funds, but it looks to me kind of like the W funds are doing the same thing that XPay is doing a little bit. It looks to me like they give you leveraged upside. You get 20% weekly leverage, and weekly's better than daily and has less NAV drag or NAV decay, or it's called volatility decay in the leverage funds. It has less than that, less than a daily. The daily ones really cause a lot of that. So I think that's a pretty sane plan. But then it looks like other than that, they don't sell options, but they do write a swap, or they do a swap. And I think a swap can simulate something else. I'm not sure. The critics of the W fund say they don't get any option premium. And I guess that's true. They don't get option premium, but they're somehow generating money from the swap to pay you back. But the critics will say, no, you're basically just selling shares. Anyway, if that's what they're doing, I'm not keen on that. So, but I mean, I'm a very fair person. It's hard to argue with success. They've been really darn successful. Look at like PLTW versus PLTY. Now, it's been a rip-roaring bull market, and the other side of this coin is look at COIW to CONY, Coney, and what I'm trying to show is and we're going to look at I'm going to go back a little bit further here. Okay, so this is the downside of leverage. It's there. They lose more on the way down, but granted, they're making more on the way up. This thing really, when you look at it, it's hard to tell there, but COIW lost 50% of its NAV, or forget about NAV, 50% in total return. It looks like it came public February 19th, and here they were on April 8th. With down 50%. Now they have come roaring back, but could you imagine what would have happened if that would have turned into a bigger downturn? So it looks to me like, not like I say, notwithstanding the fact that the swap's a private agreement, and I'm not party to privy to what's going on between those two parties, but it looks to me like they're basically just selling shares to pay the yield. So, and I guess that's all right in a bullish market, but in a bearish market, you have less shares. It's just not as sustainable. If you can sell, I figure you could sell options forever in theory, but I'm not big on the selling shares to pay the yield. I would rather a company just sell options. And then there's the issue of transparency and all that kind of stuff. But I mean, it's hard to look at this. I mean, this extra 20% a week when you do catch a bullish market is incredible. Now let's look at the other side of this. When was this last peak? This last little peak was, let's go. So it's August 8th. Let's try July 15th. Let's measure the last pullback here. Let's try July 20th. I'm trying to just measure the last little pullback, which was quick and short and sweet, but it's just kind of, I mean, this is kind of this is the other side of it. So in just in 3 weeks, these guys lost 30% of their value, total return. Now, to be fair, Coney lost 22% of its value. So I don't know. Leverage scares me, and I don't understand the swaps. Brad is more technical and is more detailed than I am, and I figure he probably had a copy of the swap agreement or something, or he maybe could have pieced the missing piece that I'm not seeing together. Anyway, hopefully he'll be around next time, but I was kind of hoping to hear what he had to say about that, because he's done some interviews with fund managers that I've seen where they've talked about swaps, and I was hoping he would, be able to bail me out on that. But I'm just saying, I gave the edge to NVDY because of the transparency, mainly because of the transparency. I like Yield Max. I don't know, but they're both good. And basically, I'm scared about the leverage. I'm a panicking. I don't need, like I was saying on the live stream, I'm not worried about what happens. So the market goes up, everything does fine. I have other things that are doing fine. The economy's doing fine. Everyone's happy. I'm not worried about the market going up. I'm worried about what happens when the market goes down. So anyway, all right. So what are you saying, Jonathan? XPay is a major point. Is they do rock based on their perspective. So it's, yeah, no, of course. And that's what I was saying. So they literally, but there's no option selling there. I don't believe the last time I checked it out, they, I'm trying to think what they do. They own is it a synthetic, or they own shares, or they own a deep in the money. I think they do a swap too, a total return swap. So it's probably the same thing. And I'm just saying that, yes, I know it's tax advantaged and that's great. But I just don't think it's as scalable and repeatable, because if you're selling shares in a down market, I don't know. I don't like it as much. I don't like that plan as much. Now, a lot of people love T-Spy. T-Spy does that, but they just sell a teeny amount of shares. They do options, and they just sell a little bit of shares just to kind of boost, just to kind of give you a little enhanced yield. So anyway, what's Jonathan saying? The W's do swaps and rebalance, so they can be 120 each week. Yeah, I read that. The swap is an agreement between two parties. I got that. I just wanted, and I put this on Twitter, and other people have too. What's in the swap? Can we see the swap? And then we probably can't. But what I want to know is, what are you giving up? There's no free money. And there's a good thread on Twitter. You probably read it, Jonathan. Where I tweeted at him. I'm like, look, there's no such thing as free money. What are you guys giving up? Are you just selling shares? What essentially is that what you're doing? I understand that the swap's counterparty is paying the yield to them. They're giving the yield to us. What is Roundhill giving up to get the swap, the counterparty, Morgan Stanley or whoever, JP Morgan, whatever, to pay the yield? What are they giving up? What's the trade-off? I just want to know what's going on. But I think I understand the mechanics of it. Okay, yeah. So XPay owns a $1 leap. So the $1 leap gives them the same upside as the stock. It's hard to even call that a poor man's, but it's anyway. But it's just basically the stock. So, but then and then what do they do? So I think, do they just sell shares of the leap to? So if they pay a 20% yield every month, they need to come out to about 1.2%. So if they have $1 million in synthetics, they have to sell, what does that equal? $12,000? Yeah, $12,000 worth of leaps. It's good in a bullish market. Your $1 leap, the market's up 10%. Your leaps are up 10%. They go from $1 million to $1.1 million. So, but then they'll pay 20% of, I'm not sure which number, but anyway, but they have to come up with 12,000 a month out of that fund. So, and so if they do that, that's fine. You can do that. It's just $12,000, but you do that month after month, especially in a down market. And what do you have? You have NAV decay. Not really, but but that's essentially because you're selling part of the NAV. The reason it's inaccurate to call option selling strategies that they decay, it's inaccurate because they're actually taking advantage of the decay. They're actually monetizing the decay. Yes, I know there's other things that happen and stuff, but anyway, I'm just not big into the Roundhill method. So anyway, that's kind of why I chose the today on the show. But you guys should just go listen to the show. It's on Twitter. The swap costs more. Good information, Jonathan. You're really liking QUSA. Well, great. I'm happy for you, Marcus. Let's look at old QUSA. Let's just compare it to the SPY, because this thing's supposed to be super steady, super safe. Okay, well, that's in the last pullback. So you can see downside was just identical. But anyway, let's go back a little bit further than that. Let's go back to a few months. All right. So when did this? Okay. So QUSA started on May 6th, it looks like. And they paid 70. So this is easy. That's $3. Yeah. So that's what, 12% or 15%. They're a target fund, aren't they? But probably, I think 15. Great job. And then they have another one called Omaha. I call it Omaha, but it's Omaha or Omha or Oma, OMAH. But anyway, let's see how that one's doing. I guess we could compare them with each other. OMHA, I guess. Omaha. No, that's obviously not it. OMAH. Omaha. Yeah, of course. Of course. Look at the yield on these are the same, basically. One paid 76, one paid 72 cents. They both started at the same price, basically. I mean, actually, Omaha started about a little bit lower, but it also paid 4 cents. It looks like it's basically the same setup, same company. I know they're different stocks, though, but I'm saying it looks like that it's the same philosophy or whatever. Well, good, Marcus. I'm glad you like those. I was going to put, 15. Okay. I was going to put, let's go over here really quick. Let's go over here. Let's go to the old, let's go to the high yield technical analysis right there. All right. Somehow, I don't know how this happened. Let's just do this. We'll insert a new row. Now, let's insert SBAR and XV and see how they're doing. Insert a row below. I can't believe they aren't in here. I could have sworn I put them in here, but I think it was too new, and so I had to take them out. SBAR. And I'm just reminded because we were talking about that at lunch, and because we got Marcus in the house, and Marcus is our. For some reason, we always talk about SBAR and what's the other one that we talk about? SPUT and CAIE. Some of the more, Marcus is into some of the more complex esoteric funds that are really steady, and SBAR is definitely one of those. And then there's also XV, but I was just curious to see where SBAR and XV would end up on the max factor. So let's throw a little XV in here too. We kind of eyeballed it at lunch, and I don't think it's going to be a high rating because these things are dogs on total return. I mean, SBAR got 1.2% total return for the quarter, and XV got 1.76 total return for the quarter. But I mean, maybe they'll show up someday. At least they're on here now. At least they're on there and exceeded minimum execution time. All right, dismiss. Anyway, I'll create a new dashboard list, and then we'll look probably at the bottom of the list and see where XBAR is. Also, let's look at the worst funds. I'm always looking at the top ones. We'll look at the worst funds, and maybe we'll see how the station's doing. The station's been doing a lot better thanks to you guys. I really appreciate it. But on Fridays, sometimes we look at the ad revenue and stuff, see how my videos have been doing. I haven't had I don't think I've really made many videos this week. I need to make some videos like new content. I'm not including just live where I go on here and talk. Half the time I don't even monetize these, and they usually get about 50 views. So these aren't for money. This is just for the love of the game right here. It's all about the love of the game. So on our worst stocks, we have Fiat. I'm not going to count that because it's an inverse, but MST, it's leverage micro strategies, and even Misty has been doing poorly lately. It lost 18% this quarter or in the past 90 days. And that's just NAV, so it's not total return. But I mean, still, the NAV return's a component in total return. Does not bode well when you're bleeding off that kind of NAV return. And of course, Murni. What are we going to do with Murni? Goldie, I mean, I was hoping Goldie would be, I thought gold was hot. How is Goldie down 8.9%? And just in NAV, well, I take that back. It's because they pay a gigantic dividend. So that's how they're down in NAV. But still, though, I thought gold itself was hot enough to make them not down as much. Anyway, Pi, YQQ, I missed. The Misty ones are just getting knocked around. Babo, Tesla, Abney, IWMY, Snowy. ICOI. Now, what's this one's? Well, yeah, because it's Coinbase related is what that one's deal is. YSPY, what's YSPY's deal? It's down 4% just a NAV return. We have Coney. Coney was doing well until Coinbase missed earnings. So Infly is a good one typically, but not lately. And this list is trying to find the momentum. I made it on purpose. It's probably too sensitive. A lot of you guys probably have Misty or Coney and are very happy with it because you have a long-term perspective. I'm trying to make like a trading index. If we were just trying to get in the hottest ones every quarter, lately it's just not going to be, these ones down here. There's USOI, HYGY, TQQY. That one's down. Some of these are good funds. A lot of these are good funds. It's just I put a lot of value on the NAV return because the NAV, I don't know, and maybe I'm putting too much into the NAV return and I should add more in for the yield, but I don't want to encourage yield chasing. And lots of times the highest yielding ones, like look at the bottom, 300, 800, 200, the bottom is full of high yielding funds. Now there's a math reason for that too. It's not, but anyway, all right. Well, here's this Omaha. So Omaha came in 82nd. And then there's SBAR came in 72nd. And then SPUT is one that we always watch. It's really steady though. I mean, this is nothing wrong with this. Look at this. SBAR has 7% positive NAV return in just a quarter. That's great. And you got a 6% dividend on top of that. So the total return, what is that? It's going to be 13%. Let's check that and see if it's right. It may not be exactly right, but it should be close. So let's compare SBAR and NVDW just for fun in August. So we'll go here to May 8, 2025. Boom. Well, total return is 15%. It's not exactly a totally linear equation, just add the NAV return and the yield, but it gets you pretty close. I mean, we were within about a point. All right. So Jonathan disagrees on NAV. Well, good. We invite disagreement here, Jonathan. You're always respectful. I'm not worried about that. That's assumed. You don't have to say it, but I appreciate you for bringing it up. Okay. So what's he saying? I respectfully disagree. NAV equals value of the cash assets that make you money. It's not an equity. If these were a vending or laundromat, you would not think about a big deal. Well, yeah, that's what I was saying. I think the reason those are so low on my list, I think we're saying the same thing, is because and I'm talking on my formula, my algorithm may value NAV return too much. And that's what you're saying. You're saying NAV returns everything. And that's what, I guess it didn't sound like I'm saying that, but I'm saying, so in other words, any of these ones down here that have negative NAV return aren't going to be anywhere close to the top of the list. All I was saying is, so you can have a fund that's an otherwise good fund, like Omaha, whatever, but because it has and even though it's not super negative, but anyway, yeah, I'm just saying that my list is ultra conservative. And so if you have negative NAV return, or if you're in the lower quintile of NAV return, you aren't going to do very well on my list. I agree with you. I think NAV's everything. That's why I didn't even figure total return. I put total return here just so we have it to look at. But because I'm trying to go on a shorter basis, I'm trying to make like a trading index, a momentum index, like a Dorsey Wright. We call it Dorsey Mike, Dorsey Max, or whatever. I've got to have positive NAV return. I think we agree, Jonathan. I think we agree. I think NAV return is everything. Or maybe you were saying the opposite. Maybe I don't know. Let me go back and read what you said. If I misspoke or if I mischaracterized you, I apologize also, respectfully, of course. Okay, you were disagreeing with me. Perfect. Okay, we were. Okay, yeah. Perfect. I got it now. I got it. So and that's why I kind of was saying, I wonder if I should if I should redo the algorithm to add in a little bit more from the yield side. In other words, instead of making them, let's say they're 50-50 balanced right now, NAV return and yield. Maybe I make them 75-25, and that would make it more for people like you or whatever. I mean, or, maybe my metric is overly cautious. But on the other hand, that's why it's called the max factor. And I've been pretty happy with the results in there lately. It's not like I have some risk. It's not like I'm scared of risk it's scared of risk. I mean, look, the top ones there's some super high yielding risky ones, AMD, NVDY, whatever. But yeah, you're right. I'm prioritizing NAV a lot more than you are. And it's because we have different goals. I'm trying to make this for a trading index, but anyway, perfect. So I agree. I know what you're saying, and I'm sorry to mischaracterize what you said. I just misunderstood it. Yeah, no, that's right. That's right. That's right. I agree, Jonathan. I agree 100% with Jonathan. But like I say, it's called the max factor. That's what people know me for is being cautious and judicious and fair and balanced and whatever. That's my brand or whatever. So I think that list represents my values just fine. But yeah, in other words, Jonathan, what he's saying respectfully, but he wouldn't pay that much attention to it. But he might think it's interesting, but it's not what's going to inform his decisions, and that's fine. I don't expect it to inform everyone's decisions. Hey, BR, how are you doing? Good to see you down here. No, here's what I'm calling NAV. So let's say we're comparing QUSA and Omaha, and I'm saying the NAV of Omaha. This is a bad example because it hasn't moved, but let's do like Misty, something with the NAV situation, and then something without a NAV situation, triple QI. So triple QI has a good reputation, and Misty has a wilder reputation. Okay, what I'm calling NAV is the start share price and the ending share price. That's your NAV. Now that doesn't factor in the third thing, which is right here, dividends collected per share. So the NAV return is 29 minus 19. The NAV return on Misty's negative $10. And I'm trying to think if that's the same as the price or not. No, and it isn't, because when they pay a dividend, then there's an adjustment. So no, I'm not talking the ticker price, but I don't know. I mean, I guess it is the starting price versus the ending price. But anyway, it's just separate buckets. And then you put any dividend you get goes in the dividends collected per share bucket. So yeah, Misty's still a good investment. I mean, of course, the NAV was down a little bit, but they paid a giant dividend, and altogether everything's fine. Whatever, it's flat. It's been kind of a little rough time for Mister. No big deal. But for instance, the NAV situation, just the NAV would be better in triple QI. If that's what you're interested in. Jonathan, not as interested. It's not, but if that's what you're interested in, the NAV of triple QI over 8 months has gone from 53 to 53, but the trade-off is you didn't have as high of a dividend. But that's what I'm calling the NAV, is just I guess it is the ticker price excluding the dividends. You can't just look at the ticker price every day, because on the 29th day of the month, the ticker price has, if it's going to pay a $2 dividend, the $2 dividend's in the ticker. But I guess you could look at the ticker the day it pays the dividend, and then at the start of the time period that you're measuring, and that difference is the NAV return. So so here's my argument, respectfully, is the reason I put a premium on NAV return, or I think it's important, is a lot of people are trading these on margin, which is fine. You do you, and not reinvesting the dividends, which is also fine. I get that you don't always have to do that. But so if you're taking the dividends and making your payment on your boat, that's great. That's awesome. But Charles Schwab isn't going to know about, it doesn't going to care that your boat's now paid off. But they're going to mark to market your account. And if you're a Misty, You started at 29 and now you're at 19. So you're minus 10 with them on margin. And yeah, you've got an $11 dividend, but it's not in drip. It's not still in the account. You're going to get a margin call. So I'm just saying, if you're on margin, maybe you get triple QI or something that is not, it doesn't expose you to that much. But the caveats being, if you're on drip, it's fine. If you're dripping this back in, or let's say you aren't dripping it back in, you don't think it makes much sense to put it into another losing thing, but you're taking this $11 and maybe you're buying VU with it, or maybe you're using it to buy other assets. Well, as long as the other assets are in your Trail Schwab account, those assets will offset your, will offset your, we'll keep you from getting a margin call, because, that's why I think that's the case for NAV being important, is if you're on margin and if you're living off the dividends. Not that there's anything wrong with that. That's great. And if it, but that's my case for being more sensitive about NAV. But if you aren't on margin, you aren't living off the dividends, you're dripping, or you're buying other assets that are also in your investment accounts, you're fine. You're fine. And plus, like, I never say this enough, but it's not investment advice. I have no idea what I'm talking about. I'm just a guy on the internet. So don't listen to me. But hopefully it's entertaining. I mean, but I do think I make educated guesses, but it's just an educated guess. Okay. All right. What are you going to do? You're going to drag me kicking and screaming to the 21st century of high income ETF funds. Oh yeah. I like the high yields. My biggest holdings are Alti, GPTY, and LFGY. Those are my three biggest holdings. I don't have it. I'm all about the yield. That's not really my biggest holding. My biggest holdings are growth, are in my retirement portfolio. That, I think if you have plenty of growth stuff, plenty of growth assets, then yeah, make you a high yield sleeve, 10%, 5%, 15%, and put whatever you want in there. It's your high yield sleeve. I mean, I'm not worried about it. I'm not looking for growth for my high yield sleeve. At the same time, I don't want to get a margin call, and I'm not on margin, but yeah, no, I'm with you. I believe in high yield. I mean, that's how come I like Yield Max. I mean, and I mean, I used to be a big proponent of Defiance. And the high yield actually, it is, as long as you're dripping or reinvesting it, it gives you extra cushion on the downside too. So I'm all about the high yield for sure. I'm all about the high yield. I bet the average yield in my high yield portfolio is, the three biggest positions are Alti, LFGY, and GPTY. So right there, those average to what, 50 probably? And also have some GDXY and, and then I have YQQQ, that's just 20. But I bet you I have a 30% average yield in that. So yeah, I'm all about yield. I am all about yield. And it's just a crazy metric. This metric's just for fun. I like the max factor, but it's not for everybody. But to defend the max factor though, I mean, could you think of 5 better stocks to have had this quarter, 5 better high? If you're switching, this is a trading index. If you're trying to catch momentum, can you think of 5 better ones to have had the past 90 days than NVDW, NVDY, AMD, PLTW, and PLTY? I mean, that's a lineup right there. That's like the 62 Yankees or something. I don't know. What was a really good Yankees lineup? 56. I mean, there's a lot of them, but that's like the Yankees with A-Rod and that crew back from 15 years ago. I mean, that's incredible. That's an incredible lineup right there. And of course it is, because I've just used a look back period of the last 90 days. So it has to be. These are what the hottest stocks have been for the past 90 days. If you look at yield, if you look at NAV return, and if you value them equally, which is what I'm doing. I could always redo the formula to value yield more, and but anyway, I think that's a pretty good lineup. I was just trying to do a Dorsey Wright, but Dorsey Wright's too slow, and I figure there's people that are watching me that are switching all the time, and and I'm just saying that these have been really good lately. Once again, this is backward looking. It's not forward looking. I can't predict the future, but to the extent the trends exist, I would expect these to stay good. Now I'm going to call BS on this. Hang on here. I think we caught a data error. Why all the other Coney ones were on their butt, and COIW is at is at like 8th place. That can't be right. Let's just. That is right, because CYW, the leverage has just been pouring it on in the good times. And even though Coinbase has pulled back, they got so far ahead of the game, they're still ahead of the game. That's incredible. When I saw that, I thought that was an error, but no, CYW is, looking at the NAV return, is gone from 32 90 days ago, 5, 6, 7, 8. Yeah, is gone from 32 to 42. That's the NAV return. That goes in one bucket. So we'll call that's $10. You got $10 in your NAV return bucket. And then you got a bucket of yield and you have $7.99 in that bucket. This thing's the complete package. Just so CYW's killing it. Killing it. All right. All right, SB, going heavy on high yield like Misty is kind of like dating a beautiful, crazy woman. You better watch things closely and look over your shoulder all the time. Yes. Don't let her talk to your friend. I've learned that the hard way. I'm just joking. All right. So to what end are you holding them, growth or share price and yield? Well, I'm holding them for yield. I'm holding them for yield, but at the same time, I want a good value. It's just like anything else. So I'm going to go get a car so I can get either a Corvette or a, 300Z, or nowadays are 350Zs. I'm dating myself. Or I could get a Dodge Charger, okay, or Dodge Viper or something. So, but then I'm looking around, I'm doing my research. I'm in Consumer Reports. Oh my gosh, Dodge Viper does not hold its value worth a darn, but I'm going to have a lot of fun in that car. Well, and the Corvette's going to make my insurance too expensive. I think I'm going to go with the middle one because I think it's the best value. So I want a fast car, but at the same time, I want a good value. So I want the fun with a high yield. That's why I have Alti and GPTY, but at the same time, I'm trying to stay in the ones with the that where they have the whole package. Ideally, anyway. It's probably the problem is, guys. The problem is yield and NAV work against each other. So anything you're trying to do is a balancing act, and you can get ones with super high yield, but those are generally the ones with poor NAV, and vice versa. So I think it's just an individual decision. Anyway, Jonathan, thank you so much. Thanks for the input. I appreciate you being here and listening to all this. Thank you so much. All right. Well, since Jonathan's going, unless the rest of you guys have a question, let's just all of us go. It's 4:30. I've been talking for a while. I was running out of stuff to say until you guys started asking questions, but I love talking about data and metrics and all that kind of stuff. But yeah, I'm trying to think. The reason I really invented the max factor was because I saw that people were trading these. I don't believe in trading them. I agree with the philosophy of what Jonathan's saying. It's like a vending machine. Who cares? You're going for yield. I get that philosophy, but I saw that people were trading them, and I like metrics and stuff. So, and I was not satisfied with Dorsey Wright. So I built this as a trader's index. Maybe I should call that the high yield trading index or something, because these are meant that you might have these, and then maybe later on, whenever MicroStrategy starts showing some momentum again, Misty will be on this list, and Misty might be on the top of the list for, 6 months or whatever. Then I'll be back in Misty. So it's a trading index, basically. All right, SB, what are you doing? You're working. Oh, wait, 219 options working this week. Wow, that's something else. Brad, what are you saying? Relative stable price is important if you're going to live off the divvies. Look at Murney. If you didn't care about the price, you'd be in trouble. Yeah. So the counter to that is you can avoid all this controversy by forget about the max factor, forget about everything, and just look at total return, and that'll tell you everything you need to know. But I can't make a metric with just total return in it, so I'm trying to do a balancing act. But yeah, so even though you like the high yield of Murney, the total return might scare you away. Or the other, how about this for another thing? How about just buy high yield funds in stocks you like? That would preclude Moderna. because just do these in stocks that were over the 200-day moving average, and you would have been out of Moderna for, a year now. So yeah, it's definitely a balancing act. It is definitely a balancing act. I like the vending machine, laundry machine example. Also, I like the example of a rent house, and I used to use this all the time. People were saying, people that didn't like what the NAV was doing. I used to say, well, here's what you can do if you don't like that. You can just buy the SPY. And I compared the SPY to having, if you have $1 million in the SPY, it's like you have $1 million house, or, but if you do want yield, your house isn't going to pay you a yield. You could sell your house, buy a $500,000 house, get a duplex, and rent the other half of it. Okay, so you rent the other half of it. That half is paying you a yield, just like Misty does. But there's always a cost for the money. What's going to happen? Tenants are trashing that half, so you're always having to fix that half up, and that is, and you could call that an expense of renting. You're trading that your NAV of your house value will probably not be as valuable in a rent house as it would in your own personal house. I was trying to equate a rent house with, so I mean, I'm totally cool with mailbox money, and I understand all that stuff. I think a vending machine's a good parallel. I think a rent house is a good parallel for it also. Yeah, it's just a rent house. Think of it like a rent house. The max factor allows you to draw income and not take a bath. Yeah, I mean, and that's to the extent the max factor works. I mean, or that's any technical analysis, not just the max factor. You could buy all those today, and if the trend reverses, that you won't have a good going forward performance. But then if you do it consistently, you should, but yeah, to the extent that trends exist, you should do well trying to invest in the ones that are trending up on a good combination of NAV and yield. I could have just probably done the NAV by itself too. But people are interested in yield. It's not just enough to have a NAV that goes up. If you can have a fund that has NAV that goes up 20%, and then you have another fund that has NAV that goes up 20%. But Fund A also paid a 50% dividend. Fund B, where the NAV went up 20%, just paid a 10% dividend. Well, I like Fund A. I'm not afraid of the yield. I'm all about the yield as long as it's a good value. But anyway, I appreciate you guys. Just by will, heck yeah. Just by will and chill. Will and chill, VTI and chill, baby. Will and chill. Anyway, SB, that's been a heck of a week. 219 options working. So you mean they're still on, or you ran through 219 this week? Probably closed. That's a big week for you. Anyway, at least we closed on the highs. That should be good. That should be good, right? All right, guys. I'm gonna get out of here. I need to make some videos this weekend. And speaking of that, let's see how I haven't seen how the station's doing in a while. Maybe you guys might like this. Let's see how the station's doing. This is mainly due to you guys always being here and clicking on stuff. Look at this. SCHD is getting a high yield dividend boost. Oh yeah, I guess they're coming out with that fund from Yield Max next week. So let's go see right here. Most influencers won't show you this, but I like this stuff. I feel there's no I in a team. This is a team effort. You guys are a big key to my success. Also, suggesting new videos for me to do and stuff. Somehow has me $80. That's way more than I usually make. I don't think that's right. I think that anyway. Let's just look at the whatever that's going way better. Let's look at the let's look at my subscription count. Man, this is going good. Holy cow. Jonathan's probably not still here. A lot of this is due to him. This is about the time that I started doing stuff with Jonathan on Twitter, and I have taken off. It was at 36.94, and now I'm at 150 points higher, 140 points higher, something like that, 46, 44, something like that. Anyway, That is really good. I wonder, maybe somebody, did one of you guys give me some money? I know I got a donation in PayPal last week that I really appreciated. It came at the perfect time. It saved my butt. But that doesn't count on here. But maybe I got a super chat or something. Maybe somebody super chatted me and I just haven't seen it yet. But anyway, so let's see. So these are my videos right here. Alti's getting some competition from Curve. That got 2,300 views. That's pretty good. The Good, Bad, the Alti, that got 2,000 views. Why is Max Yield Max Karen? I thought that might get more views than 909, but whatever. It's done well. But I really haven't made it. I need to make a new video that's in the line of one of these to keep my performance going here. Let's check out this. Let's check out Earn. Supers memberships, watch paid ads. Anyway, one day I checked. I tried to show it one day, but you guys are like 99.4% man or something. I checked out the demographics, and it's just a sausage fest in here. All right, so I said I hadn't made very many videos this week, and that's what I'm talking about. Guys, I really don't think I've made a major video, and that's been my ad revenue the past few days: $1.38, $1.02, 83 cents. $1.40. But last week I was killing it. I had the high yield math actually did pretty good. The top 20 of the week did pretty well. Wise blocks, curve stomping, LFGY, that one did well. Anyway, I need to get back to this thing where I need to get back up here. I've been kind of lazy. Sometimes I go through phases. But what I do is I usually get busier right around the end of the month because that's when they cut off your payment. And then the first week of the month, I kind of ease back. But I've been coasting. I need to get on the ball. Plus, I have some good videos to make. I have some good stuff I want to talk about. So I'll try to make a good video this weekend for you. I'll try to make something that you guys will like, a good comparison or a good review or something. I was thinking about comparing the W funds, comparing the Yilmax funds with the Round Hill funds and doing a comparison. There's, I think, 4 of them have been out since February, and the other ones just don't have enough time. But I was thinking about maybe just comparing those 4 funds that have been out since February. So TSLW against TSLY. You guys know which ones they are. All right. So do we have earnings next week? Missed on DraftKings. Oh, that sucks. I'm sorry about that. I'm sorry that now earnings is kind of slowing down, but I'll take a look at the earnings and I'm going to look for the liquid options and we'll try to find the liquid options and stuff. Yeah, better yet, just buy SPY-I. Apparently, let's check SPY-I. Let's see how it's doing lately. I haven't pulled up performance on it lately. Now, this isn't an income fund, but it's a really interesting growth fund that Marcus and I are interested in. And these guys never did email me back. They emailed me on Monday and said they would get with me to get a time, but I checked every morning because I don't want them to email back. And sometimes I forget to check my max convexity email. I might only check it every 2 or 3 days, but whenever I'm expecting like an interview, I'll check it every morning. And I checked it this morning. And so, but these guys that own this fund, it's their names are Zach and Greg, and they own T-Oak is the name of what's the name of the fund though? I'm drawing a blank. Is it? Oh, it's not Oak Tree, but it's Oak Hill Capital, Oak something. It's a farm. It's the name of a family farm. It's in Zach's family. He named his business the same thing as the farm. It's like a farm name. Anyway, let's see how SPY-A is doing. Well, SPY-A is doing pretty well. No dividend, but neither does SPY. It's only been around since June 3rd. So we don't have a lot of data. This one is supposed to shine on the downside. These guys run a long volatility hedge. It's like a hedged equity. They should do well without a lot of downside. Is the whole idea. They just haven't been tested. In the time since June, we just haven't really had a test. We could look something like this. Let's go over here to July 20th. Let's kind of measure the last pullback. Well, July 20th to, what was that? Was that August 1st? What day was the low? August 2nd? Something like that. And they did. They showed buffer on. It was just a short time frame, but they did show some buffer on the underline at that point. Anyway, these guys do some kind of long volatility strategy. That's why we need to get them on the show so we can talk to them about it. Yeah, Twin Oak. Twin Oak, exactly. I knew it was oak something. It sounded like a farm. I was thinking oak tree. Anyway, but all right, guys. Well, I appreciate you all for being here, and I will talk to you later. Hit me up this weekend in Discord. If you have any ideas on videos to make, you can always suggest it. And I also have a list of them in Discord of things I need to review and stuff. So, but there will be a video coming out. I probably ought to do that tonight and get that out soon, make a top 20 video. And you guys have already seen the top 20, so you guys don't have to watch it. But I'm going to do the top 20 video, make a thumbnail, and try to make a joke or two and write a script and put a Patreon post out and try to get some money coming in. But you guys have already seen the results. You guys get a special preview of the results. So take a look at Lay's. No dividend. It was $11 after liquidation day, but it had a few good months. Lay's, like the potato chips people. And he's saying liquidation day. He means that what did Trump call where the tariffs were on? Anyway? What day was that called? It was called something day. All right, I'm going to look at Lay's from the first of this year to now. Well, heck yeah. Why didn't you tell me about this before? He's holding out on us. Look at this. Would you take a look at this? He's holding out on us. We could have all been, oh my Lord. If they have options, I could have bought call spreads and rolled them. Holy cow. 140%. Man. Now they were down 25% in the time the SPY was down about half that much, but heck yeah. Heck yeah. Is that the potato chip company? Anyway, Brad, yeah, it's had a few good months to say the least. Okay, well, now you got me interested. Let's go over here to FinViz. What the heck is Lay's? Oh, yes. Okay. No, it's not the potato chip company, but it is stacked. And maybe that's why it's called Stacked. The Stacked, it's called, the name of their company is like Stacked something. Stacked ETS or something, or Return Stacked is exactly what it is. So yeah, look at this. So this thing is 100% NVDA and 100% AMD stacked. I had not heard about this, but that's where the Lay's comes from. Chips. It's just stacked chips. All right, well that makes sense. It's been a hell of a good time to get in chips. Now, this thing, I'm not predicting good performance whenever the market goes south on this because it's fully leveraged in 2 chip stocks. As long as chip stocks keep doing well, that'll be fine. Yeah, anyway, good find. Good find at all. Yeah, clever. All right, guys, so I'm going to get out of here. I appreciate you all for being here, and I will talk to you later. Have a good weekend.